Welcome to another edition of Brian's Big Idea. And I'm going to go with the big idea this week of it being earnings season. Now, earnings season comes around once every 3 months where Wall Street gives its report card to shareholders, tells the company, each company gets to tell its shareholders how it's been doing over the last 3 months and what it's expecting for the next 3 months. So with that in mind, and also being the first quarter, they're also going to give you forward guidance for the full year. I like to talk about the beat and raise quarters. Those are my favorite things in the whole wide world. It's basically 6 months of good news all in a day. And I say that because they beat, and that was the last 3 months were better than expected. And then they raise guidance. The next 3 months will be better than expected. That's why I love those beat and raises. It's going to be a difficult quarter right now to come in with a beat and raise. We still have inflation running rampant. We have all sort of concern over interest rates. Are they going to go down? Are they going to go up? You know, the CME FedWatch tool was at, 75% last week. I saw it yesterday down to 42% as the chance for a rate cut coming up in March. We do have the Fed January 31st. But this week, we've had some earnings already. The other week, we had financials coming in. But this week, it really gets going, really heats up here. And we start tonight with Netflix, then we got Tesla tomorrow, and then a few others such as Intel and Western Digital on Thursday. So what am I looking for in earnings? I'll tell you what, the main thing that I'm thinking about in earnings is, has management been able to convey a beatable level to Wall Street? They've got inside information, their management, they're supposed to have it. They know when they're going to beat the number. They know where about the number is going to come in. You had a chance to pre-announce earlier a couple weeks ago if you were really going to miss. So we're thinking it's going to be an okay earnings season because we didn't see too many negative pre-announcements, right? But we want to make sure that management is doing their job. So let's run through a couple quick names here and take a look at their what's been going on with them, and then we'll wrap this up with a nice little plug. All right. So first, we're going to go to Netflix. They are reporting tonight, as I have already told you, and it's Netflix, as you can see, and it's NFLX is the ticker. It's a Zacks rank number 2. A for growth, D for value. And I love to see that because I am the aggressive growth stock strategist here at Zacks, and I want to see a stronger growth style score and a weaker value style score that tells me I am right on the right path. And we can see right here, here's your date for your earnings, and that is today. All right, so that's Netflix. What have they been doing? How has it been going for Netflix, you might ask? And since you asked, I'm going to tell you. We had, a year ago, we had a big miss, and you're starting to wonder, like, oh, no, what's going on here? But they followed it up with a beat, a bigger beat, and then a decent beat. Now, Netflix... How can I say this? They had a couple good announcements today. So number one, they had WWE is going to be moving to Netflix in January 2025. Kind of a big deal, an influential thing. And then they also had they led the way with Oscar nominations, 18 Oscar nominations. Not that I have seen any of them, but that's great for them. But it's kind of odd that so much good news comes just before the print. So that makes me pretty nervous about Netflix right here. So if we take a look at the estimates, we see estimates have been creeping higher though, 218 to 220, $3.99 to $4 for next year. So this year's kind of a dead duck here, but it's crept higher with the last quarter. And then next year, $5.93, now pressing $16.08. We love to see earnings estimates moving higher here at Zacks. That's what the Zacks rank is all about. All right, so our next stock that I want to talk about reporting on the 24th, that's going to be Tesla. Maybe you've heard of this company. They make electric vehicles, TSLA. It's a Zacks rank number 2 with a C for value and a B for growth. Still has good growth there. And just a quick look at this chart here, up 260 and straight down to 210. What can I say? I own a Tesla. I am super happy with it. It's not without its limitations and or problems, but it's so much fun to drive. I'll tell you that. So much fun. And it drives itself. My car drives itself. Mega cab. Really big company, but it does move around quite a bit, as we see from the chart. All right, let's see how they've been doing. Let's see, Brian. How have they been doing? Well, they beat 4 quarters ago, and then they beat by 2 cents, and then they beat by 8 cents, and most recently they missed. You don't like seeing that. You got to hope that it's not a trend here. But, a few years ago, I think you can remember the naysayers out there talking about how Tesla doesn't earn any money. Well, we can see these are all positive numbers. They're earning money. But see, people still love to hate on this company for so many reasons. You're hearing about Tesla and how people don't want EVs, people aren't buying them, yet they have more than 1 million reservations for the Cybertruck, and that started the delivery, so we should get some information on that, and for that reason, I'm really liking Tesla. So not that much movement here. 74 cents down to 73, but back up to 74. A quick little blip on the screen there. Next quarter holding still. I mean, no, and really from the last earnings where they missed, they knocked it down a nickel. This year, right in that 315, 316, so a nice little penny there. And then next year, there's that nickel move down lower, 387 and down to 382. I have to believe that they're going to give some good talk about the Cybertruck and talk about how they're going to actually ramp deliveries, and that would be a big benefit for this stock. But you don't know, and I mean, that's the thing about earnings. That's just my belief. Finally, I'm going to talk here about Western Digital. I mean, not a big household name, but, this is a storage drives sort of company. It's a Zacks rank number 2. F for value. I don't like seeing that. F for growth, D for value. But boy, oh boy, look at this chart here. I mean, I'm not going to say it's the stuff dreams are made of, but it looks really good. That 45-degree angle is something that we would all love to be holders of that stock back in early November, late October. Let's see. Okay, we're not going to see how Western Digital's been doing because we've talked long enough here. And now the point is, how are you going to select the stocks that beat earnings? How do you do that? Well, we have a service here at Zacks, and it's headed up by David Bartosiak. It's called Surprise Trader. And Dave scans the list of Zacks rank number 1s, number 2s, and sometimes he stretches down to number 3s to find the stocks that have the best potential to beat earnings and have a positive Zacks rank. So what are they looking for? How does the magic work? Well, there's a few, very intricate things that go around there, but the idea, generally, if I'm going to boil it down to one sentence, is if the analysts are upping estimates right ahead of the report, you have a very good probability that those estimates are done for a reason, that analyst knows a little something extra. And when an analyst knows a little something extra, he's going to move his numbers up right in front of the print. That's a good indication that there very well could be a beat. We don't know if that means a raise, but at least a beat. And you want to get 1/2 of that scenario right. So Zacks Surprise Trader, and I've got it up here on the screen, and we've got it run by David Bartosiak. He's also going to, here he is, smiling away. He also gives us a nice talk about what's going on in the market. And, here we see him the other day. He's talking about the 10-year Treasury notes. So not something that is normally confined to earnings and just earnings. Dave's going to give you his broader market perspective. He's done a great job with the service, and I can't show you the portfolio, but trust me when I tell you, everything on it is green. Everything on it is green. Dave is known as buy and hold Dave Bartosiak, and he buys and he holds stocks and he gets winners, and that's a great thing. So be sure to check out Zacks Surprise Trader. All right, that's it for this time. Be sure to join us next week when I have another big idea. And until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.